Welcome to Matters Financial and Geopolitical from a Frontier. I hope you had a great weekend. We got a bit of rain, but it's still quite warm at midday. International markets, daily data point, the world economy is poised to exit from a period of panicked uncertainty. The next period of panicked uncertainty is probably not too far away, Tom Orlick says. Let's move on to the currency markets. Euro dollar 112.41, dollar index 97.09. Japanese yen 111.05, Swiss franc 0.9945. The pound, that's had a little bit of a bounce after testing 130 on Friday, 130.69. The Australian dollar, that's firm, 0.7130. India rupee 69.295. South Korean won 1131.90. The Brazilian real 392.32. Egyptian pound 17.3225. South African rand 14.373. This is a dollar index chart from Simple Trends. He's saying the long consolidation has done its job and sucked in plenty of dollar bears. Going higher, he says. I agree with him. Fed fund futures are pricing between 1 and 2 rate cuts in 12 months, which is way beyond what is justified by the economic data. Sterling, indicators breaking down. Big Brexit vote Monday could be a catalyst. We're now at 130.70. Euro dollar, this chart is from T Commodity. 112.41. I'm looking for 106 and then 1. Speculators have increased their bearish euro bets to $11.3 billion, highest since 2016. Dollar yen, as I said in my article, if things go to hell in a handbasket, be long the yen. And Simple Trends thinks it's going to explode. Commodity markets, gold last at 1290.595. Lots of gold bugs long above 1300. Crude oil last trading at $60.79 in New York. It's in the sell zone that I described, 60 to 62.50. But 62.50 is now the optimal sell level. Brent crude, this is a chart from T Commodity, seeing it tiring out. Emerging markets, the US Omani base deal aims to cut off SCPEC plus SC lines of communication. This is Andrew Coribico. He's saying that the base in Oman is being portrayed as being connected to containing Iran, when it actually has much more to do with containing Pakistan and China. Both of those coastal cities are astride the Afro-Asian Ocean's SCPEC plus trade routes between Chinese-built megaport of Gwadar in southwestern Pakistan and the African markets that the People's Republic is dependent on for ensuring its future growth. It's obvious to conclude that this is being driven by their shared desire to contain China, and saying that basically Duqm and Salalah are perfectly positioned to serve that purpose, though that scenario is so strategically obvious. It's something that both China and Pakistan would have previously considered. Dubai fears the end of its build it and they will come model. The shimmering palace residences apartment blocks will look out through palm trees across Calm Creek waters, lapping in from the Gulf towards what developers boast will be the world's tallest structure. The futuristic rocket-shaped Dubai Creek Tower will be a notch higher than the Burj Khalifa, the current holder of that title, just down the road. Off-plan sales of the palace residences were launched in January, with one-bedroom flats on the market for $272,000, generating significant demand. The project is a classic example of the build it and they will come development model that has served the rulers of Dubai well for the past 4 decades. Carve out a space in the desert or on land reclaimed from the sea, build bigger and better luxury residences, offer top-class amenities, and sit back as wealthy expatriates snap them up. The skyline remains dotted with dozens of cranes, but amid a second downturn in a decade, many stand idle. Property prices are down at least 25% since 2014. Growth in GDP decelerated to 1.9% last year, the Emirates' slowest rate of expansion since 2010. The entire business model needs a radical reset, says one company executive. Costs are too high to sustain these levels of activity. Some business people question how much the government is listening. It's like we're talking a different language, says one person who attended. We talk about long-term investment and growth. They can't see beyond the security risks. Saying that they've had a problem before. This was in 2008. Was at risk of becoming one of the first sovereign defaults of the crisis, weathered the storm thanks largely to a $20 billion bailout from its big brother Abu Dhabi. In 2009, it was saddled with $109 billion of debt, equivalent to 130% of GDP. Saying shifting regional dynamics have not helped, Abu Dhabi's foreign policy has forced Dubai for the first time to choose politics over business. Country's strict implementation of US sanctions on Iran has also hit transshipment trade at Dubai's Jebel Ali port. UAE's intervention in the war in Yemen is estimated to have cost billions of dollars and sullied the country's image. Long used by multinationals as a regional base, some companies are rethinking that strategy. PepsiCo has made redundancies at its Dubai headquarters and is moving about 30% of roles into larger markets such as Egypt and Saudi Arabia. Another chap, I'm going to China. This place is dead. It's okay if you want to retire here, but I have another decade ahead of me. 24th of February 2014, I wrote that Dubai is the real transit state, a connection point in an interconnected century.